All right. What is up, tycoons? What's up, traders? Super excited for today's video. Coming at you guys with another viewer request. We're going to be taking a look at Johnson & Johnson today, ticker symbol JNJ. We're going to go over the daily chart structure. We have a current chart pattern here. We're going to go over the key levels that we need to get above to go bullish and the key levels below that if we break below there, we will be bearish. We'll also take a look at the MACD. All right. It is potentially flashing a signal right now to us. So we want to be very cautious. All right. We're also going to be using today's sponsor, Simply Wall Street, to give you guys some really great information, right? This is Simply Wall Street's platform right here. And what it does is it gives you amazing technical, or not technical analysis, but fundamental analysis. And it gives you some really nice graphs. All right. And it's super easy to use. That's why they're today's sponsor. I have been using the platform for a long time, and now they're officially a sponsor of the channel. So happy to share that with you guys. Before we head any further and take a look at those things, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear in this YouTube channel are not registered financial advisors. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer, and we'll go ahead and we're actually going to start off here with the Simply Wall Street fundamentals, okay? The first thing that we're going to look at, which they categorize things for you very nicely. So from a valuation perspective, Johnson & Johnson has a 2 out of 6 on the valuation score, right? You have price to earnings versus peers, price to earnings versus industry, price to earnings versus fair ratio, and the analyst forecast. Those are the 4 negatives, right, that Johnson & Johnson has. Now, on the valuation score, the 2 positives are it's below fair value and significantly below fair value. And when you're on the platform and using the platform, you can click on these and it will go a little bit deeper and dive into those. If we click on this one right here, the price to earnings versus the industry, right, we can see here that the industry average is about 17.4 and Johnson & Johnson's is about $33 right now. So that's why it does have a negative score right there, because when you compare it to, the industry, all right, the US pharmaceuticals industry, Johnson & Johnson is much higher than the industry average, right? And so maybe that's something that you didn't really know before, and that's just something that the platform is going to do for you guys. Now, one of the positive things was the fair value right here. And we look at the share price versus the fair value, right? And the current price is about 163.70, right? And fair value has it around 217. Now, what is the fair value of Johnson & Johnson? For this estimate, they use a discounted cash flow model. So it's basically trading below the fair value by more than 20% here currently. Now, when it comes to future growth, okay, they also scored 2 out of 6 on there. So, from a valuation perspective and a future growth perspective, we're not seeing great scores on here. They are saying that it is undervalued according to the fair value and the discounted cash flow model. If you look at some of the key information, they just had earnings. They had 8.8% earnings growth rate with a 9.6 earnings per share growth rate. The pharmaceuticals earnings growth was at 13.4%. Revenue growth rate is at 2.6%, and future return on equity 33.9%. And that was last updated April 25th. Okay. Now, here is the fair PE, price to earnings, versus its current PE. And it is slightly above, but it's basically trading at that fair price to earnings ratio right now. If you take a look at the shareholder returns, all right, over the past 7 days, Johnson & Johnson is up about 0.6%. On the year, in the past year, it's down negative 9.3%. If you compare that to US pharmaceuticals, it is outperforming pharmaceuticals in the past 7 days, but over the past year, all right, US pharmaceuticals have actually gone positive by 1.6%. Meanwhile, Johnson & Johnson is down negative 9%. And compared to, the total market, all right, the US market in the past 7 days is up 0.4%. And in the past year is down 1.7%. So, over the past year, it's not really, when you compare Johnson & Johnson, it's not outperforming the US market, and it's not outperforming the US pharmaceuticals, which is essentially what they do right here. They show this stuff for you guys, right? It's really easy. So if you want to use the Simply Wall Street platform, there'll be a link in the description as well as a pinned comment below. And all you have to do is, click that link and sign up, and you guys will get a 14-day free trial. And the first 100 people to join, they actually get up to a 40% discount if they use my link. So, there was some brief fundamentals that we touched on there. Simply Wall Street goes much deeper into it, and there's a lot more that we can, really dive into if we wanted to. Feel free to use that platform to do so. Now, let's go ahead and get back to the technical analysis. And well, currently, right now, we have what's known as a bull flag forming right here. All right, that's what this structure is that we're seeing. And we're going to look and see, in a perfect world scenario, you're essentially going to break this trend line here and get a push upwards, right? And it's going to be roughly the length of your flagpole, right? So here's the flagpole itself. The breakout would be, roughly something like this, okay? And take us to possibly retest some of these previous highs that we had on Johnson & Johnson. But we do need to be cautious because we're battling our major retracement levels of resistance right now. And what these are is the 61.8, the 50%, and the 38.2% level. These are the three most common and well-respected Fibonacci retracement levels. And you can see we had a very strong move to the downside. And we're now in that retracement section, right? Now, we haven't been able to get above the 50% retracement level at 165.62. We have wicked above there, but we haven't been able to really flip that to an area of support and push higher. If we do that, 169.26 is going to be the next major level. And the way you use the fibs is nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down, retracement, continuation lower, or you get a move down, move up, retracement, and a continuation higher, right? So we can use these to spot the trend continuation. If we move down, retrace, reject these levels, there's a possibility we could continue the downtrend. And there's a gap down here to about 145. That's what this blue box is. It's a gap on the daily time frame. If you look right here, there's another small gap to fill. And this one is right under 160, so about 159. All right, is going to be the gap fill there. So there are two gaps down to fill. But just as we have, the fibs for resistance to the upside, okay, we also have our fib levels here of support from our most recent swing low to our most recent swing high. All right, we're still holding above healthy retracement territory to potentially continue the uptrend. All right, so, same thing with the way down. We're looking at a smaller wave now, and we're looking to see, essentially if we stay above 156.70, that is our line in the sand. If we flip 156.70 to resistance from support and we break down out of this bull flag and flip that to resistance, there's a strong chance we could get that 145 gap fill or retest some of our previous lows in that $151 price area. All right, so that's really the main things that I'm looking at right now. And the reason we're bullish above or bearish below here is because you also use the fibs to spot trend reversals, right? So let's say you move down, you retrace, and then you start consolidating and break through those retracement levels, you can spot a potential upside reversal. And the same thing to the downside, right? If you move up, retrace, and you start to consolidate and break through those retracement levels, you can spot a potential downside reversal. So, right now, we're kind of in a range between about 156 to 169. We're not really going to have any true clarity on what the direction is going to be in that range, right? We could really consolidate for a while in here. But if we flip 169.26 to support from resistance, we're going to be bullish above there. And if we flip 156.70 to resistance from support, we're going to be bearish below there. All right. So hopefully you enjoyed this video. If you did, smash that like button, subscribe to the channel. Don't forget to check out today's sponsor, Simply Wall Street, where you can get really great fundamental analysis as well as trade ideas, investment ideas, and, just an overall really great platform. Use the link in the description or feel free to use the link on the pinned comment below. It'll get you guys 14 days for free. And then from there, if you choose to make a purchase, all right, the first 100 people that use the code exactly or use the link in the description or the pinned comment, they can receive up to 40% off of their purchase.